Hey guys, what's up? Welcome back to another episode of the Elite Investing Show. And today, I've got a very special person on my show. I've got Mr. Andy Dane Carter, who's an expert on real estate. He's a real estate investor and entrepreneur, as well as an expert real estate investment strategist. And today's episode, we're going to be discussing real estate.
That's
Thank
right.
you so much for being on my show, Mr. Andy.
100%, bud. 100%, man.
So, Mr. Andy, why do you get started in real estate?
I got started for the lifestyle. So I was trying to continue the lifestyle that I had, which was basically around like health and just being free. So it wasn't to get rich. Like that wasn't the plan to start. Like the plan was to basically just keep this kind of lifestyle going. And then it just exploded really quickly. And then that was, like about 10 years ago. And I haven't looked back ever since.
Well, that's like really interesting. And then, so you just started with real estate and you just continued along.
Yeah, no, I started with real estate and then that's actually merged into so many different things and so many different companies and so many different ways to invest. That's the beautiful thing about investing is it can be anything. It doesn't really matter, but you have to start with yourself. Like that's where the first stage of all of this works is you have to invest in yourself first before you invest any money anywhere because you have to know exactly what's going to work best for you.
Yeah, like Warren Buffett said, the best investment that you can ever make is in yourself.
100%. Like I believe that's so much. It's crazy. Like until you are mentally prepared to make $1 million, you have no business making $1 million.
Yeah, I totally agree with that. So then moving on towards real estate. So what should like a part-time or a first-time investor know about investing in real estate?
Sure. So the first thing that you want to really learn is the more doors you have, the better. So so for investing in the US, you can buy a house with the same kind of lending as you would buy a duplex, triplex, or fourplex. So it's a huge part of my message is the first piece of real estate that you ever buy or the first thing that you want to invest in should be where you're going to live. But you can buy a 4-unit building and live in one of the units and then rent out the rest to cover your mortgage. So if you just buy a house like 99.9% of people, that's it. You're the only one that's responsible for that mortgage. So if something happens, if you lose your job, if something happens to the company you work for and you get fired or something happens to your children, God forbid, like you don't have 2 or 3 other families helping you with the mortgage. It's just you.
Oh yeah. Yeah, that's true. So you're saying one should invest in, say, a building and then that has more than one unit. So you can cover your mortgage as well as the building's mortgage.
Absolutely. And there's so many ways to move and there's so many ways to hedge and you can travel the world and still have your unit there and you could rent out your unit while you're traveling. Everybody thinks, that they don't want to buy something because they don't want to get stuck somewhere. That is not even close to true, especially in today's day and age.
And then would you recommend diversifying real estate holdings? I mean, diversifying not just among cities in the same country, but across countries as a whole, like international real estate.
Absolutely. So I've got some humongous meetings going on right now in Dubai, Oman. Like I love real estate, period. All over this planet, all over the world. Like there's so many great places to buy real estate. And it's just something that lasts forever. Like and it can be handed down from generation to generation. There's places that I would never buy, and there's also places that you would think I would never buy that I would buy like crazy.
And What do you think about real estate investment trusts? Because that's the most common way the average retail investor gets into real estate. One, it's diversified, and two, it pays a really high dividend compared to, say, the regular stock market. For example, Salmon Property Group pays somewhere between 6 and 8% of its total earnings per share as dividends, compared to, say, a company like Procter and Gamble. Would you recommend people invest in individual real estate, or would you recommend them investing in, say, a pooled real estate fund like an REIT or a hedge fund that deals with real estate?
Sure. It's pretty much predicated on what you want to do and how you want to grow and how fast you want to grow. There are some people, their two most favorite words on this planet are safe and secure. If those are your two most favorite words, then a REIT are really, really good because it's between 6 and 8%. You're going to get it. It's protected. It's a nice, safe investment. Where I don't like them is somebody else is in control of my investing future. So I don't like the way that feels, which is why I don't have any money in the stock market except for a couple companies where I sit on the board and they've given me stock in the company. I like to own everything. So I can sell it when I want. I can exchange it when I want. I can pull out money when I want. I'm in full control. So when I took full control of my family's future and my investment future, I pulled all my money out of the stock market, out of REITs, and just did everything myself. So you could start with a REIT and learn the business and then maybe take your money out in 24 to 36 months and then you start off on your own. So there's not really a bad way to do it. I would just suggest at some point to have a definitive exit strategy for how you're going to do it yourself.
Okay, and how should, say, an average person start? Because real estate actually costs a lot. The average property in the US costs somewhere between 100,000 to, say, around $250,000. I mean, the average person doesn't usually have that much in the bank, or taking a second mortgage out is kind of risky as well. So how do you recommend someone start? You just like buy a REIT, like getting back to the REIT topic, do
Sure.
you or do you recommend someone take out a second mortgage if they're like completely sure?
Yeah, well, it just depends on what you want to do. So if you want to like really get into the game, there's plenty of houses all through the US that are $18,000, $25,000. And there's duplexes that we buy all over Cleveland, Ohio, Columbus, Ohio, places in Texas. I mean, like there are $45,000 duplexes all over this country. Like there, I mean, millions. So, and that's only, so if you're going to buy it with a loan, you're only going to put down like $3,000, $4,000. So, or if you want to buy the property completely outright, you could buy it for $40,000 and then you're going to make somewhere around $1,200 to $1,800 every month for the rest of your life. So, I mean,
That's
you're
a
going to have your,
huge ROI. I mean ROI.
yeah, and that's the thing. It's like everybody wants to play this game fast, but when you really get your head around playing this game slow and you look at how much money you're probably going to make over 20 years and it's going to go up and down, but it's going to be way up, just like it has been, for the past 300 years in this country. Like it keeps going up. It's going to go up and down, but in the long run, it's gone way up.
And that's the beauty of real estate. For example, the stock market doesn't protect you against, say, inflation, but like real estate does.
That's
So
and that's the biggest play. I'm so glad you brought that up. Nobody talks about inflation. I had a huge meeting about this on Friday. Do you know how many times that the US dollar has gone to zero since the country's been around?
15.
12. Yes, it's like that's a lot. Like the actual US dollar had zero value. Like I don't know about you, but that definitely would scare me. So that's why I like real estate.
Yeah, inflation, basically, that's like the biggest eater of money. That's the thing that basically causes most investments to actually lose value.
That
Because
is correct.
psychologically, if you have a 2%, because psychologically, if inflation is at 0%, but you get a 2% pay cut, you'd be sadder than if inflation was at 4% and you get a 2% pay rise.
That
Because
is
that's
correct. That's right. That's right.
so. Would you prefer, say, flipping? Flipping is kind of common these days. So you buy a dilapidated house somewhere, and what you do is you just fix the house and add new furniture, add a new carpet, and polish the walls and stuff. Or do you say wait for cash flows? Like buy sturdy, safe property and wait for cash flows on it. Which one would you recommend more?
Sure. So like I usually do both. So what like I teach a lot of is you can flip houses to get a certain amount of cash and capital to buy buildings. So but so many people get stuck flipping houses for the cash and they never actually reinvest it back into a really high performing asset because they want to buy like a Lamborghini or a Ferrari. They don't want to have their tenants buy them one in 2 or 3 years. So where everybody misses the mark is they've got $200,000 or $300,000 in cash. They could go buy a $1.3 million building that's going to kick them off a couple $1,000s a month. That'll pay for your Lamborghini, and you also have an appreciating, incredible asset.
But then, how do you like tell whether a house is flippable? Like, how do you say that it's not going to be dilapidated forever? Like, how do you know you're actually going to get a sale value that's, say, several, $1,000s over what you paid for it?
Sure. So you have to really be educated, and so I mean we flipped over 1,000 houses, and we're I mean I can pretty much walk into a house and know exactly what it's going to cost me to do exactly what we need to do. And I also know exactly what we're going to be able to sell it for. I'm very much on top of every single number that we need to hit our metrics, but it takes time and it takes practice. So what's really smart is to find somebody who's flipping houses and go work for them. Even if you work for them for free, you're going to learn on their dime and on their mistakes instead of your dime and your mistakes. So I give people this advice all the time, like go find somebody who's flipping houses, see if you can do something for free to learn what they're doing, and then go do it yourself.
So you're saying you can learn how to flip houses,
Yep, it's very, very easy.
but it takes quite a bit of time to learn. I mean, like the
It
way you
just,
said
ju-
it.
just like anything else in life, it is its own language. So when you go to a new career, you go to a new job, you go to a new country and you don't speak that language, in probably 2 or 3 years, you're going to be fine. You're going to speak the language
Yeah.
well. You're going to be maneuvering yourself through everything and you're going to be good. You have to look at every new career, every new endeavor, any new everything. You have to give yourself time and permission to learn the language of it. And real estate's no different.
And what do you think of investing for the sake of appreciation? I mean, some people would have invested in 2008 or 9 because housing prices were at a big low thanks to the big foreclosures by the big banks.
Hmm.
So they would invest solely as a value investment, and this would cause the price to rise, and they would sell it solely because the price rose and not for cash flows. So do you think that's a better method of investing compared to, say, flipping or investing solely for rent?
Yeah, it's a little more like gambling because you don't really know how long it's going to go up for, and you don't know how long it's going to go down for. So it's usually more of like a feel and more of like some kind of timing for the market. So for us, we started in 2008. So we got lucky. We got lucky that we started buying buildings in 2008 and 9 that most of them literally have over $1 million in equity just because we happen to buy them at the right time. So it's a so so it's a good strategy. At the same time, it's super risky. I would always rather buy something that's going to be cash flow positive, and if it goes up, great. extra for me. If it goes down, I still don't care because all of my expenses are covered, the mortgage is covered, the taxes are covered, and I'm still making income.
So how do you analyze, say, how do you like go into a house and say whether it's good or not? I mean, that's the biggest part of real estate investing. So
Yeah, so you really have to look at the neighborhood, you really have to look at the city. You just have to look at the math. Real estate is just math. People like to make it very emotional and it's not. It's just math. That's it. This is how much it costs. This is how much it's going to cost to fix it up. These are what the rents are, and what can I sell it for? Everybody likes to make it really complicated. The simpler it is, the better. So what you do is you go online. I could literally go wherever you're at right now and find really good real estate deals because I just know what to look for, and then you build that skill set up. I can go anywhere in the country and be flipping 20, 30 houses a month if I wanted to. It's just, you just have to kind of know, like, okay, I need to get this house for 110. They're trying to sell it for 150. So if I can get $40,000 off somehow, this is a great deal. And then
yeah.
so you learn to negotiate, and nobody can touch me. Like I've been doing this for a long time, but I've been negotiating my whole life. Like it's just a skill that I've acquired. And it's fun for me to teach it to my kids. And my 5-year-old's a savage, and he's a great negotiator.
So who would you like place on your real estate team? So, for example, I've read Robert Kiyosaki and his books on real estate, and he
Mhm.
mentions lawyers, accountants, and property managers, and investment managers, and tax accountants, and stuff like that. So, how do you pick people? Is it just based on someone you get along with? Because that's what Donald Trump recommends in most of his books. Or is it usually someone more educated compared to likable?
Yeah, well, it's actually both. So, like, you have to have somebody that's very well versed in their field. I don't care if you're the worst attorney on earth, but you're my buddy. I'm not going to use you. Like, it's not. It just doesn't work. So, you have to kind of find that ground, especially in a professional advisor. So if it's going to be an attorney, if it's going to be a CPA, if it's going to be some kind of accountant, you want somebody that's going to push back against you. And they're going to ask you hard questions. And they're going to say, hey, this is why you hired me. This is what we need to do. Those are the people that I respect. I don't like to get in those rooms when everybody's telling me yes. And then I have to stop the meeting and go, listen, I hired you guys for your advice. I don't need you if you keep telling me yes. Like, how do we fix this problem?
Oh, that's true.
So
So,
it's really important just to ask a tremendous amount of questions. And then your gut will usually be correct. So if you get a feeling like, I think this guy's kind of full of shit, you're probably right.
so what are some of the questions that you usually ask those people?
So the first one is, where'd you go to school? Which I don't really care about. I just want to know. And then it's, how long have you been practicing? Who have you practiced with? And do you own real estate yourself? And the last question is the most important. If you don't own real estate yourself and you're trying to advise me on real estate, we have a problem.
Yeah, yeah, that's really true.
Right? So it's like, I'm the greatest real estate attorney on earth, but you just own your house. Like, I'm not touching you.
I mean, that happens with a lot of financial advice. They don't own stocks themselves, but then they just come up and they say, this one's going to go up.
It's like a smoking doctor who's overweight. I'm not talking to you. If you're not healthy and really out of shape, then I'm not going to work with you.
And if you want to become a real estate entrepreneur, what are some lifestyle changes you've got to make?
It's a good question. So if you have to take the emotion out of it. So like the mindset is really important because you'll find a deal and it checks all the boxes and it's a beautiful property, but it doesn't quite make sense from math perspective, and you buy it anyways because you want this cool property to show your friends and your family that you bought. And then you get yourself in a pickle, and then the market turns, and now you're in foreclosure. So you really have to get your head around, like, you shouldn't buy a 20 unit building because you heard a YouTube video of Grant Cardone and he said you should only buy 20 unit or more. You have to do what's best for you. So for me, I like to get people very educated, listen to a ton of podcasts, read a ton of books, really know the business, because then you're going to know where your risk threshold is. If you are already like super stressed out, have tons of anxiety, you might want to wait a little while until you really jump into the game.
Is it easy to, like, say, go to a real estate website like Zillow, and if you say search up a property in Manhattan, New York, is it easy to tell whether a property is going to be good by just looking at it, or is it necessary to go all the way to the property and check it out?
Right. So for me, I always like to at least walk the property. But there's times where there's no time. So we still write the offer, we still go. But I will ask a trillion questions from somebody. So here's a perfect example. Let's say, I'm in I'm in Europe somewhere, and there's a property that's in Cleveland, Ohio that looks incredible from Zillow. And I'm like, okay, cool. I need to call the agent and I want to find out more. It's like, and I would just get them on the phone and say, hey, here's where I live, and I'm a cash investor, and I have a corporation here in the States. I would love to know more about this property. Would you mind going to the property, sending me some videos, and then sending me a detailed report on these things that I've asked, like about the foundation, the roof, the plumbing, the tenants, the neighborhood, the city. So I have this checklist, and then I get a video of the property in real time, and now I'm developing a relationship with that real estate agent in that city. Because if this deal goes really well and that agent makes money really quick from me, they'll start sending me deals that are good.
So you're saying the real estate agent actually knows which deals are good.
Some of them, like, you have to vet them even more because they're the worst. Like, I love real estate agents, but a lot of them really don't know what they're doing. So you have to vet them just as much as the property.
So what questions do you usually, like, ask the prior landlord before buying a property?
I usually ask them the hard questions because they don't like to disclose the stuff. So I always ask about foundation. I always ask about roof and electrical. I always ask, if there's any lawsuits pending, if there's any liens on the property that they know about, if there was any tax problems. And then I start really into the tenants. Like, what is your relationship with the tenants? How long have the tenants been there for? Is it like a single mom, with 2 kids, or is it a family and they've been there for 10 years and they're great? Like, I like to really know who's there in the properties.
It could usually, like, kind of be an empty property as well.
Yeah, and then that can be a plus or a minus, because if it's empty, that's great, and you can do some work and fix it up and then rent it out. But the other problem is now you're spending more money. So if you have, like a 2 or 3 unit building and it's fully rented, everybody's happy, and they've been there for years, you just go in, you buy it, you raise the rents just a little bit, and now you're set. You just keep going. So sometimes it's great to have them vacant. Sometimes it's better to have them 100% occupied.
So how long does it take to, like, find a perfect property? Because, there are thousands of properties all over, say, just one city in, say, Long Beach or Los Angeles.
Mm-hmm.
So it's probably, like, takes forever to find that one good property.
Here's what I tell people. Find out what your budget is, and then go to those parts of the country that have those kind of properties. So if your budget's $100,000, like, you have no business being in Long Beach. You have no business being just about anywhere in Southern California or New York or like certain parts of Miami. But there's tons, like hundreds of thousands of deals in different parts of the country that make a lot of sense, that are great, unbelievable properties. That's why we buy all over the country. So I would really focus on what's my budget, how much can I spend, and then get laser focused on a specific city, and then learn everything you can about that city. You could spend your entire career just in Cleveland, Ohio.
That's interesting. So you're saying I can buy just properties in Cleveland, Ohio, and it'll be set for life.
As long as you buy enough of them, yes.
So would you say, for example, let's say an entire area of, say, Omaha, Nebraska still is down just for this year. So would you just go up there and snap a lot of properties, or would you be a bit risk averse and say just snap up one or two properties because you don't know when the recession's going to end?
Yeah, I would probably walk before you run. So if this is your first property, you just want to take down one, see what it feels like, see what it feels like to manage from far away, see what it feels like to just run the business that way. And then if it's great and it feels good, do another one. And then if it's and then just keep going.
Then you mentioned to manage from far away. How do you do that?
Right. That part is actually difficult. So you have to find a property management that you trust, which is also very difficult, but it's also very possible. And as long as it's not vacant a lot, you're going to be fine. That's where
But
people get the pickle.
like, isn't it expensive to have, say, a property manager? And if you have homes in Seattle, New York, and Miami, flying around those three places is going to be really expensive.
Right. So what we do is we usually see our properties once a quarter. So we're like once every 3 months, we'll usually see them. But at the same time, we also have all kinds of property managers, and they send us reports and photos and videos. So here's what you don't want to do. You don't want to get so stuck in all of the problems and all of the analysis that you never even make a move, because this is a risky business. That's why you can make a lot of money. But if you can manage the risk, and it's like, okay, here's this property, it's $40,000. It's going to cost me $500 a year to pay somebody to manage it. You have to factor that into your budget, and then away you go. And then there's plenty of people that never see their properties, ever, ever, ever.
So you're saying it's possible never to see a property and still manage it and still make money from it?
Absolutely.
So you don't really watch over that property?
Like, there's plenty of guys that I know that own thousands of properties, and they only see probably 10 of them, if that.
Okay, and moving on, what contributes to the success of a real estate entrepreneur?
Again, I would go back to mindset and being wildly disciplined with your metrics and your math. Like, I don't ever waver. I don't care if I'm close. Close is not good enough. Like, these properties have to make money day one or I don't do the deal. So being extremely vigilant with your disciplines is important, because if you start slipping, it's when you get yourself in trouble.
So discipline is number one.
100% with everything in life. That's just real estate.
But the good part about real estate is that, I mean, the stock market fluctuates 9 to 5, 5 days a week. Real estate doesn't do that.
Real estate does not do that, which is great for your stress levels. Let me tell you, there was a time in my life where I was trading stocks and real estate, and I was like shorting gold and buying options. I was a mess. I was so stressed out all the time. I got like, get out of the stock market. I was up at 4, and I was just stressed out by 8:30. I was done for the day. I'm like, I'm over it. Or it was a huge win. I'm high-fiving everybody, but then I'm exhausted at, like in the afternoon. So yeah, I just stick with the nice, steady climb of real estate.
So discipline, and then what else apart from discipline?
Really being aware that there's a lot of options. Like, so many people get stuck in the fact that they can't buy a deal because they don't have any money, or they can't find a deal, but they have money. It doesn't matter. It's you really have to think outside of the box. So if you don't have any money, you need deals. If you have deals and you have no money, then it's the other way around. So that's the way that I started. I didn't have a lot of money, but I got access to a lot of deals. So then that brought in investors, and then I started to make a lot of money very quickly. So I just wouldn't get stuck in, oh, this isn't going to work for me. That's
Well,
just
the
not.
thing is, like, you get to decide what other people are going to pay for your property. The stock market, you don't get to do that.
That's right. And that's why I don't like the stock market. Like, I don't have any control over those companies. I don't have
So,
any control.
so what are the other advantages of real estate apart from, say, inflation, the psychological advantage, as well as being able to decide the price of your property?
It is the greatest tax break on earth. And you get to depreciate this property. Even if you just looked at the depreciation metrics, it basically pays for itself over 20 years. Like, it's insane. And then now with the new laws that just passed, everything can be ran through a pass-through LLC or S corp. So what you were normally paying 30 to 40% tax on, you're now paying 20 to 21. So it's getting lower. Like, it's crazy.
So wait, so you depreciate it at 20% and you can record that as a loss and you get tax credits on it.
Kind of, yeah. So it's more of like there's a set level of depreciation for the particular asset, and then the laws that were just changed, you can run it through your corporation from like an expense standpoint, and you can just save a ton of money.
So depreciation basically gives you a tax break.
Yes.
But then when you look at the stock market as well, so let's say you bought a stock and you're making a loss on it, and if you realize the loss, you still get to get a tax credit on it. I mean, that's the other part of the stock market.
Yeah, no, I know. None of it makes any sense to me. I don't get why you'd have any money in the stock market.
I mean, a lot of people have become rich that way.
Yeah, hey, you know what? And that's awesome. That's great. I just like for me, I just like it to be nice and safe.
And then the big part of real estate that I'm going to ask you now: how do you analyze a tenant who wants to stay at your property? What questions do you ask them, and what do you look at?
Yeah, so for somebody who wants to rent the property for the first time, I just ask them really hard questions. So I ask them a lot of very personal questions. I ask them, are you married? Are you single? Do you have children? Do you have pets? Did you go to college? Do you have a degree? What's your job? I just start asking a million questions just to kind of learn about them as a person. I don't care if you're an ex-con. I don't care if you're a felon. If you're a good person, like, you're probably going to be a good tenant. It's the ones that like are really shady and don't want to answer the questions. Those are the ones I know I'm going to have a problem with.
But aren't like felons or ex-cons like shady?
Some of them, but there's some that are just great people that just want to break. Sometimes they're the best tenants because you actually gave them a break and nobody else would. And you keep their rents a little bit low and they never leave because they'll never find another place to rent. So you just have to find out what's going to work for you. But I've never had a huge problem renting to people that had some really bad pass. It just depends on who they are. That's why we ask them a ton of questions.
And so you look at their, say, credit or FICO score as well.
Yes, of course. But I mean, even then, like, there are people that have an 820 FICO score that are terrible people that pay rent late every month. And you know what I mean? So it just really depends on the person.
So how does the FICO score work?
So it's a blend. So it's a blend from 3 different places where they pull different things you've done with your credit, and then you get an average. So the average is what everybody looks at. So
what is a good FICO score?
To be considered what's called like a paper, it's I believe it's still 720 or higher. So between 720 and 900 is considered great. Anything over 800 is considered excellent. If somebody has, 650 or lower, um, you 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 might want to look into their backstory a little bit. And if they're in the fives, you for sure want to look into their backstory.
And how do you deal with a person who's basically, defaulting on the rent? They don't pay the rent every month, or they're saying they'll pay later, but they don't anyway.
They just get evicted.
So you
That's
just kick, so you just
Yep.
kick them out.
We just kick them out. And every state is very different. Every county is a little bit different. So there's some states that are very landlord friendly. There's some states that are very tenant friendly. So it just depends. So we always just try to get out the problem as fast as possible.
And getting to the point where every state is different. So for every state, do you have to have a different attorney?
Yes, but it's not that hard to get somebody out. Like, okay, so California is one of the hardest states, and it's like $3,000 to $5,000 tops if everything goes wrong. So, and then in like, for example, Cleveland, Ohio, it's like $300 and it's 20 days because it's a very landlord friendly state. So yeah, it just depends.
So for a first-time investor, you'd prefer them invest in a landlord-friendly state compared to something like California.
Yeah, I would, yes. But
But
that's only assuming that you're going to have major problems. And there's people that have the same tenants for 20 years. You don't have any problems. You just want to understand those laws for that state.
do you get to increase rent if it's the same tenant? I mean, would it be, nice? I mean, it wouldn't be too nice to, increase rent on someone who's been staying there for 20 years, but you have to deal with inflation.
Right. So and we experience that a lot. So there's people that, like these particular properties were owned by these older, and like these people never raised their rents in like 15 years. They're paying like $400 and they should be paying 1,600. So when we come in, we say, listen, here's what we're going to do. In the next 3 months, you guys are going to get a substantial rent raise and rent increase. If this is something you guys don't want to do, we will help you find a new place to live. But you guys, like, the party's over. There's no more $400 a month rent. Some places have a thing called rent control where you can only raise it 3% a year no matter what. So you have to kind of watch out for some of those areas as well, because if it's in like a rent control zone and someone's been paying $300 a month rent, you could only raise it 3% of that every year.
So dealing with inflation is kind of difficult.
Only in certain areas. So we try to stay away from those because there's plenty of times where it's like, look, you've been paying $500 a month for 9 years now. Now it's going to go to 19.
And that's going to be a big toll on the tenant.
Yeah, but here's the way I look at it. If you've been paying $500 a month rent and you're not saving any money and you're not trying to buy something yourself and you're driving around in a nice car and you got a big shiny watch, like, I don't have any, I don't care if your rent goes up. Doesn't bother me at all.
So it's more like look at their credit scores and make sure that they can actually pay their rent.
That's correct. Yep.
And Warren Buffett says, I mean, related to the stock market, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And when you bring this to real estate investing, would you be happy buying a bargain property in a bad neighborhood?
That's my favorite. That's my absolute favorite.
Like in a bad neighborhood, like say in a crime-ridden area of say Chicago or like West Harlem, somewhere where there's a lot of crime. You'd be happy buying a property there.
That's where we buy most of our properties.
Why?
We don't buy nice properties in nice neighborhoods.
Why?
Because the tenants are usually a pain in the ass. So what we do is We buy properties in C and D neighborhoods, and then we fix them up, we make them nice, and the tenants never leave. And the rents are usually pretty comparable to the nice neighborhoods. That was the biggest shock. So in one of the hardest neighborhoods in all of Los Angeles, where it's gangs everywhere, right? Like gangs shooting each other in the streets. The rents for like a 2-bedroom, 1-bath house are like $17.95 a month. You take the same 2-bedroom, 1-bath house and put it in a nice zone in Long Beach, just a couple miles down in a really nice area, and the rent's like $2,200. But
So
the
how do you
price,
how do you move
right?
a house?
I'm sorry.
So, okay, go on.
Okay, so let's say that you buy a house for $300,000 in a terrible neighborhood, and the rent's $17.95. Okay, and then you go to a nice neighborhood where the house is now $600,000. It's twice as much, but the rent's only $2,200. So you're going to pay twice as much for that house, but you're only going to get $300 more in rent. So we look at it as we like to buy those homes and buildings in those neighborhoods that are just okay, because they slowly go up and the rents are really, really steady always. And we have a lot less problems, which seems the total opposite, but
Yeah,
that's been our experience. And most people, they hate to buy those kind of buildings.
but isn't it like hard to get clients in, tenants in, say, a place where shootings are very likely or there's a high crime rate? Isn't it hard to get tenants there? Like, who'd want to live there?
It's because if you're from there, it's home, and you don't ever leave. Most people that are from those hard gang-ridden neighborhoods, they're more afraid to move someplace nice than to stay where they know everybody. It's all psychological. Like, if you took this very nice family that was in this very rough area and you put them into a really nice neighborhood, most of the time they have anxiety. And then vice versa. If you take somebody from a nice neighborhood and move it to like a not so nice neighborhood, they have anxiety and feel out of place. We've just done this for a long time, and it's just, most people like to stay with what's normal and comfortable for them. Neither one are good or bad. It's just wherever you feel comfortable.
Okay. Now that came as a shock to me.
Yeah, no, believe me, it came as a shock to me. So when I first got into real estate, there was a property that we had in Watts, and I drove there and I was trying to find out how much they were paying rent. And there was literally cops blocking both sides of the street, so I couldn't even get into the street to see the house. I had to park over here and walk in. And I mean, gangs. They were paying $17.95. I didn't even want to walk into the house. It was so disgusting. And then you go to the neighborhood I was living in at the time, and the same size house was $2,100 and twice as much.
So yeah, that's surprising.
I know. Surprised me too. That's the first thing I said. I literally drove back to the office and I go, why are people paying $1,800 to live in these terrible neighborhoods? And they're like, because it's home. Like, that's why owning stuff is so important, because rents always go up. Rents never go down. Like the real estate market goes like this, the rental market's gone like this.
Wait, so even in 2008 or 9, rents didn't go down?
Rents went up.
In 2008?
Yes, properties went down and rents went up, and they've continued to go up.
How does that work?
Because people lose their home, right? And they're used to living in a house. So now they have to go rent somewhere, and they're going to go rent a house. So the rental markets go up to fill the demand. There was hundreds and hundreds and hundreds of thousands of people that lost their homes. They had to go somewhere. They had to go rent. So the rental market, there was a massive demand because there was a massive housing shortage. Like, nobody looks at the basics of this. Like, okay, so hundreds of thousands of homes all got foreclosed on. Where do you think those people went? They can't buy a house again. They have to go rent.
Yeah.
So that drives the demand.
And then moving on. So what do you think of commercial real estate investing? Is that completely different from, say, home owning?
Yes and no. So you can be both. And it's kind of like we talked about from the very beginning was you can buy a fourplex or triplex, live in one of the units, and then rent out the rest. So technically, you're a homeowner because that's your property, but you're also a landlord. So you're learning how to become an investor. So you can do both at the same time.
So how does commercial real estate investing work? So do you just, say, buy a street in the World Trade Center in New York when it's selling at a good price?
Right. So here's what I like to tell everybody is you're an investor first. I don't care if you're just going to buy one house and live there. If you have to think about it like you're an investor. So you want to get a good deal. You want to do a bunch of research. If you can look at yourself like an investor first, you can, there's just way more things you can do with that.
And what do you think of investing in an emerging market like China or India? They're growing fast. Would you recommend investing there, or would you say wait until they become developed? Because China or India can be a bit unsafe at times.
Yeah, I think it's great. I think they're both great. I think it's there. You just have to get extremely educated wherever you're going to invest. I don't care if it's in India or China or the Philippines, wherever you're going to invest, just get a ton of knowledge.
And so you just have to learn what the place is about.
That's right. And then if it goes up, great. If it goes down, you learned. Like that's it. There's never going to be any like guaranteed investing. Like that's why it's called investing. Like, you know what I mean? Like it's not, here's my $100,000 and it's just going to go up for the rest of my life. You have to constantly be managing your money.
And what would you recommend in a business or real estate plan? What do you think it should consist of?
You actually broke up just a little bit. What was that question again?
So if you had like a real estate business or real estate entrepreneurship plan, what do you think it should consist of?
If you are a broker, it for sure needs to be consistent of a real estate firm. You want to be very savvy with marketing so you can get more clients in to get more income. And then you should be reinvesting all of, not like all of your commission, but a great deal into buying more real estate. That's like the kiss of death for most of these real estate agents out there. They make all this money and then they just spend it. Like they don't buy anything with it that's going to make them any money over time.
It's just buy Lamborghini.
Yeah, that's exactly what they do. They buy the nice cars so they can drive around to these houses, and then when the real estate market turns, they don't have any, like, it's all gone.
And for the investor, what would you recommend in a real estate plan?
Get extremely educated and then just buy something to start. Get in the game. Figure out what it's like and see if it's for you. If it's not for you, you'll know. But if you don't do it, you're always going to wonder, I wonder what would have happened if I would have invested in some real estate 20 years ago. I've never had this conversation before. It goes like this. I am so happy I sold this piece of real estate 20 years ago. Everybody is disappointed that they sold it because they always can look back and go, I sold that property for $40,000 20 years ago. Now it's worth $800,000. So everybody's always in regret when they talk about selling something 20 years earlier.
And to conclude, I just wanted to ask you, what would be the disadvantages of real estate compared to the stock market?
The disadvantage, I mean, in compared to the stock market, the stock market can go up really fast. So if you have a stock that you bought for $2.33, and they just got acquired, they just came out with a product, they had some ridiculous reportings for like a certain quarter, and the stock jumps to like $6 or $8, like that's a good
You should put your money overnight.
that's a great investment. And then you can pull it out and pay tons of taxes on it. So that'd be the plus, but it's so rare. Like that just doesn't happen that much. And most people that it does happen to, and let's say they make $100,000 in a day, they're going to reinvest it back into the stock market. Very similar to like what people do in Vegas. You just keep playing because you won. And then at some point, you're right back to where you started. You lost all that money back.
And one thing that I get a lot of, one thing that I think about a lot is it just as simple as buying a house that has its mortgage below what you can get as rent? For example, in Philadelphia, the average rent is $2,000. I checked about, I think, a month and a half ago, but then the mortgages are selling at around $650 a month. And it's a good 3-bedroom, 3-bathroom house in a nice neighborhood in Philadelphia. So is it just that simple? Did I just find a bargain property?
Like that, you just nailed it right on the head. Like that's exactly what you do. You go find those properties. I like Philadelphia. So you just find a good property, have the rent make sense, and buy it.
It's just that simple.
That's it. That's it. Nobody likes to complicate it. So if it doesn't work, they have an excuse. It's just do your research, find the property, and then go all in.
And then, in most cases of finance, they just say the value of an asset, any asset, is its future cash flows that are what it's worth to you today. Do you think that applies for real estate?
Yeah, for sure.
So you're saying whatever cash flows you get, that is what do you get after rent minus mortgages, and then that in the future what it's worth to you today.
Right, and so that's basically going to be your income. And the great part is that's going to always consistently go up. So as long as you're staying with the green and you're not going in the red as soon as you buy the property, you're in a great position.
And when do you sell a property? I mean, a lot of people, like Bernard Baruch has said, selling is harder than buying.
Yeah, I try to never sell anything unless it's going to be through an exchange, and I'm going to exchange it 100% tax deferred into something bigger. So you sell when either the building has no more depreciation left and your cash flow is not, it's hard to say because they're always going to make sense to keep unless you just want a large chunk of money. So for example, you're 65 years old, you've got like 10 buildings and you just want to sell 2 of them and put like whatever 4, 5, 6 million bucks in the bank, because for the next 20 years you're just going to travel and have a blast. Like, do that. That sounds great. It just gives you options. That's the beauty of real estate, is you have tons of options as you get older to do whatever you want. Like, you can pull money out and reinvest in other things.
So, and you can basically just take the money from one property, like the cash flows from one property, and put it in another.
That's what I do constantly.
And how does depreciation ending work? I didn't get that. Like you said, when a house runs out of the ability to give you like tax breaks from depreciation, how does that work?
Right. So there's a sliding scale. So it's usually over the life of the loan. So once you start to hit those last few years, there's not that much depreciation left. So that's when it's usually time to exchange or get into a different property or kind of restructure how it's held. If you type into YouTube, because it's a long conversation and we probably talk about it for about an hour, there's tons of videos out there that really just explain the basics of how properties are depreciated. And then that was one of the biggest epiphanies I had in real estate. I was like, wait a minute, what? You can just, like, all of it just gets wrote off? Like this, I go, why doesn't everybody do this? And, and he just said, I don't know, everybody should. Like that was their answer.
So fundamentally, real estate investing is the same everywhere. I mean, if you take out the legal bit, it's basically the same.
That's correct. Yep.
So it's same whether you buy it in Germany, whether you buy it in Saudi Arabia, and whether you buy it in the US.
Yep.
So it's fundamentally the same.
It's fundamentally the same. And that's why, I have a huge following from all over the planet, because it's the same. Like, you buy it, you rent it out, you make money, and you sell it or you keep it.
I get that. So how do you basically explore all the properties all over the world? Like Germany, Australia, Dubai. Like, how do you look at so many properties?
So they usually come to me. So what they'll have is they'll say, here's this deal, and it's in Dubai. Here's the numbers. Here's this. What do you think? And then I look, and if they're really good, I hop on an airplane.
But then, when you were and you were a smaller investor, how do you look at thousands of properties?
I mean, I was writing 20 to 25 offers a day. So I would go and drive them like crazy because there was no kids. I wasn't married. I just worked all day. I would work from 6 to 9 every day. So I would drive all over Los Angeles, drive all over Orange County, drive all over the place and just look for deals.
But then you had to restrict yourself to just California.
Exactly. And that's what I did in the beginning. For 4 years, I never left California.
So it's a good idea to just start with what you know.
That's right.
So if you're living in, say, New York, you just stick with New York for now.
Stick with New York until you figure it out. And then you can use that. And that's the thing, is it's like riding a bike. As soon as you figure it out, you can go anywhere else in the world and do it. You just got to figure it out where you're at really well first.
So, and do you have any last words of advice for real estate newbie?
Yeah, just don't be scared to get into the game, especially if you're young. The best advice I got was from my really good friend's dad, who he actually came to this country with nothing. They were Lebanese. And he's like, you're 25 years old. He goes, you could go broke 5 times and it wouldn't matter. He goes, you have so much time. And he was right. He's like, you need to take some risks. It doesn't matter if you go completely broke by the time you're 40. You still have years to make more. But you got to try.
So the best time to get started is now.
Now. Yeah, and just learn. That's the best thing too, is it's never been easier in the history of the world to learn. We're literally speaking right now, back and forth. It's so easy to listen to podcasts. It's so easy to listen to audiobooks and to read books. And you can go to YouTube now and listen to the best minds of our time speak from stage from the comfort of your house. And you can just take notes. It's never been easier to learn. Ever.
And you can just go to your nearby library and grab a book.
That's it.
Say 100 doors.
That's it. And there's and it's free. 99% of everything I put out is free. All my content is free. Free book, free educational videos, free everything. So it's really easy to learn. And then you can apply what you've learned to investing.
Thank you so much for being on my podcast, Mr. Andy Carter.
Of course, my friend. Of course.